The AI reckoning. Wow. Okay, let's just get right into it because the market, it woke up today and absolutely chose violence.
I mean, we saw a really broad sell-off. The S&P 500 down a steep 1.6%, pretty much wiped out all of yesterday's good feelings.
Then you have the Dow Jones tumbling 1.3%. And this is the big one, folks. It fell right back below that huge 50,000 milestone. Ouch.
But the real pain, the absolute epicenter of this earthquake, was the Nasdaq. It sank a full 2%. And what we're seeing is investors just aggressively rotating out of tech names that they're now scared are going to be the AI losers.
So, the entire mood on Wall Street has officially flipped. We've gone from a market totally driven by FOMO, that fear of missing out, to one that is now completely dominated by the fear of getting disrupted by AI. And believe me, this is the new theme driving pretty much every single decision out there.
And if you want to see how this fear of disruption is playing out in real time, let's dive into our first company, Cisco Systems. This is a company that got absolutely punished today, even though on the surface it looked like they had good news.
The move? It was brutal. Shares of the networking giant just plummeted, down roughly 10%. A huge gap down right at the opening bell.
And this is where it gets interesting, because there's a real paradox here. Cisco actually had what we call a beat and raise quarter. I mean, they beat their revenue estimates and they raised their full-year guidance. Now, normally, that is the perfect recipe for a stock to go up.
So the sales were actually good.
Exactly. Sales were solid. But, and this is the key, investors looked right past that and they fixated on one thing: costs. Management warned that the price of memory chips is going up, fueled by that same AI boom, by the way, and that's starting to eat into their gross margins. That's the slice of profit they make on each product. The crucial point here is this: in this market, selling more stuff doesn't matter if it's costing you more to build it. Profitability is king, period.
Okay, so now let's look at the complete opposite side of that coin. Our next company is Equinix, and its story today is basically the mirror image of Cisco's. So while the rest of the market was just a sea of red, Equinix, it surged an incredible 10.2%, just a massive, massive rally, completely against the grain.
And here is where the market's logic just gets completely flipped on its head. The company actually missed its Q4 earnings expectations. Yeah, you heard that right. They didn't hit their numbers. Wait, so they missed, but the stock went up? Precisely. The market did not care one bit about the past. It's all about the AI forecast. The CEO came out and said, look, demand for our solutions has never been higher, all because of the AI boom. And then he issued a 2026 outlook that just blew past Wall Street's targets. The narrative is so simple. AI needs a place to live, right? Well, Equinix owns the real estate. They are the AI landlord. And today, that was literally the only thing that mattered.
And for our final story today, we're going to look at what happens when a company gets left out of the AI conversation entirely, because it's just too distracted by its own internal problems. And that company is the Walt Disney Company.
So Disney shares slid over 5% today, and the selling pressure, it really intensified when news broke about a reported $170 million loss on just one single production, the live-action Snow White.
Look, this isn't just about one movie. That loss, it really just highlights the ongoing, much broader struggle for all of legacy media. The studio side of the business is just burning through cash, and that path to making streaming profitable, it is still super bumpy. And you know what? Investors are getting impatient, especially when you have other companies out there showing a really clear path to growth through AI.
Okay, so that's the deep dive. Now for what might be the most important part, your water cooler angle. This is exactly what you need to say tomorrow morning to sound like you have the market completely figured out.
All right, on Cisco, here's your line. It's tough out there for hardware companies. Cisco basically had a perfect quarter on sales, but because memory chips are getting more expensive, the stock tanked 10%. It's like getting a promotion at work, but finding out your rent just doubled. You're making more, but you feel poorer.
Next, for Equinix, you're going to say this. Equinix is the ultimate proof that AI is still the magic password. They missed their earnings numbers today, but the CEO just reminded everyone, hey, we own the buildings where the AI lives, and the stock went up 10%. Being the landlord is always a good gig.
And finally, on Disney, here's the take. Did you hear about Disney? They apparently took a $170 million loss on Snow White. That is brutal. At this point, I think investors would prefer if they just stopped making movies and focused on selling more $15 pretzels at the parks.
That's a great way to put it.
Okay, so that brings us to the big question. We just lost that 50K level on the Dow. So what do you think? Is this a buy the dip moment before the next leg up? Or is this the start of a real 10% correction? I want to know your plan. Let me know below.
Go ahead and comment below, and make sure you subscribe to Market Fluency for your daily edge.